Hi, I'm Kerry Craig, Global Market Strategist. In this video, I'll be outlining the key themes from this quarter's Guide to Markets for Australia. The first half of the year was dominated by inflation, the outlook for interest rates, and China's ability to deal with the onslaught of COVID-19. The persistent inflation pressures and central banks' willingness to ramp up the rate hiking cycle led to a dramatic repricing in markets and strong selling pressures across both stocks and bonds, with little respite for investors. Central banks will continue to act in an attempt to rein in inflation and squash inflation expectations. We expect further front-loaded rate hikes from the US Federal Reserve and the RBA before they slow the pace of tightening later in the year. In the near term, we don't see higher rates as being detrimental to the growth outlook, but the transition from mid to late in the economic cycle should correspond to a downshift in economic activity. As such, we continue to monitor the economy closely to gauge for early signs that recession risks are building. The market narrative is closely aligned to the recession risk in the US and Europe and within the Asian region, and here in Australia, things are looking relatively stronger. Domestic demand is recovering across the region, and the reopening of China, albeit slowly, bodes well for the broader regional economic growth. Meanwhile, the rise in debt servicing costs and the slowing in the housing market are in focus in Australia. Households may start to feel the squeeze, but are in healthy shape, and elevated commodity prices are supportive for the economy overall. There remains a high degree of uncertainty in the direction of markets as we climb the peaks in inflation and central bank hawkishness, while traversing the lows in stock and bond markets. Because of this, we take a neutral stance towards bond and equity markets with a focus on quality assets that can withstand the economic and corporate uncertainty. Thanks for watching.